been a sharp jump. So you have the Hong Kong market, which is now trading with around 1.5% in terms of gains.
The bank has also confirmed today that it has made its application for the new CEO well in time to the RBI.
On the way up, the upper end of the falling channel is at 19,460.
This month was the highest ever in the history of Indian auto industry.
First take on the index, well in the green, Nifty at 19,512, so conquering that milestone.
Yeah, I'm looking at this as a really long-term thing and would love to engage with them more in the future, maybe increase.
We're getting into the festive season with close to 2.9 lakh booking pipeline on the SUV front.
As far as market shares are concerned, in heavy-duty trucks, we are now at 9%. Last year, we were at 8%.
And it's the mid-caps which are going very strong.
It's like a different market, right? The mid-cap markets, they're two different markets. We're back to saying that mid-caps have a complete mind of their own.
Our board and shareholders have approved a fundraise up to 750 crores.
The markets, Nifty at the day's high, 81 points high there, 0.4% of a gain is what we are seeing.
Well, that was the day so far. It's turning out to be a pretty decent Monday so far. You're with us here on a fresh edition of Closing Bell. We're coming to you live from the CNBC-TV18 News studios. I'm Prashant. With me, my colleagues Rima and Surbi here in the studios. Guys, hi.
Hi.
Good afternoon.
Good afternoon.
And Nigel, of course, joins us from the newsroom.
It's your tie again, Prashant. I remember the green on Friday and the tie. I think you've got the bulls in fine spirit.
Shirt. I was checking. Friday it was the tie and the shirt, right? So anyway, I mean, Friday, of course, was different, right? It was a completely beast of a market with everything rallying in sync. And we saw that after a long, long time. Today, it is, I mean, it's nothing, it's orders of magnitude lesser, but can't take away from what's really going on. Let me just quickly start with a brief word on the large cap. So, you've got... It's been, by the way, a big swing day, right? And the opening happened, and then there was a big sell-off which happened, and then there was, a second coming of sorts, and the market stable after that. We're up about 1/3%. The important thing is that we are above the upper end of the falling channel. I mean, the level that we put out in the morning as well, which is 19,460. We're about 19,500 plus right now. On the way up, if the Nifty's got to start to, pack some energy from here, the next target is 19,700, which is the 61.8% retracement of the entire fall. Supports remain similar. The range has been about 19,200 to 19,550. So 19,200, 19,230 is supports. Bank Nifty, again, will come up. That is also, the last I checked, higher, but by a lesser degree, about 0.25%. That should, again, if enthusiasm lasts, retest the cycle highs, which is basically the highs we made in the month of August. 44,950 is that level. That's another 1% out from here. On the way up, 45,312 is the big, same 61.8 retracement of the fall, which stands at 45,312. And I just want to end with what's happening with the small cap index. It just picked up pace. Last week was Friday to Friday was 4.5%. And, today, if anything, we've picked up pace, 1.33% of the small cap index. So that is leaving behind pretty much anything else which is happening out there in the market. And so much action in that space. We'll discuss a lot of that over the next 60 minutes. Rima.
Aye, some more points. One, Europe is firmly in the green right now. So the early rates in the European indices suggest to a very strong start and currently up close to about 3/4 of a percentage point for the frontline indices there. When you look at the mid-cap action, the mid-cap and the small-cap index have gone ahead and hit a fresh lifetime high today. The advanced decline ratio is strong. We've got nearly 2 stocks in the green, for 1 in the red, and the individual gainers, Railway, they're just rocketing. It's IRFC, which is up 16%. The market capitalization now stands at 80,000 crore. This is a company whose IPO price was 26 rupees. And look at the stock now, 65 rupees on that. RVNL, Ircon. These stocks are flying. Other mid and small cap names like JP Associates, Bajaj Hindustan, very solid double-digit up moves coming through on them. When it comes to the frontline pack, at least it's good to see that there has been some follow-on buying. Friday was a good session, and today at least both those indices are holding up well in the green, and the dip has been bought too. Somewhere in the morning there was a dip in the markets. The Nifty went, came under pressure, but that has been bought into. And this is a sea change from what was happening in the prior few sessions, where at the higher levels, every time there was a dip, markets continue to gravitate lower towards the lower end. But this is the first time in the last many days that we've seen the dip being bought into. IT metals are leading the rally. Both those indices are at a fresh 52-week high. And if you look at the individual names, it's Wipro, Tata Steel, Ultratech Cement, HCL Tech, Hindalco, Tech Mahindra. Surbhi, I think 7 or 8 of the top Nifty gainers are associated with commodities, which includes metals or IT.
Oh, absolutely. And that's the China factor, right? We've been discussing this since the morning, that finally the measures that we are seeing in China with the aversion of that default by yet another Chinese property developer, that and that slew of rate cuts that we've had, PBOC, and then, of course, the deposit cuts from a lot of the big Chinese banks that have finally started to show up in terms of market confidence. And that explains the bulk of the day's rally. It's been a very strong close. By the way, the Hong Kong Hang Seng ended up pretty much close to the highs of the session. And that's the kind of gain we've had there, 2.5% on the higher side. And European markets are carrying this momentum forward. So that's, something to keep in mind, that we've got very strong global cues. And on top of that, the market is managing this 70-point move. By the way, we're back at 19,500 after 6 trading sessions. It was the 24th of October, which was, the Thursday before last. That's when the market was on this level of 19,500. And then, we started slipping again. But for the time being, it's been good going with, of course, a big shout out to the commodities pack. On the volumes charts, in fact, the mid-cap market has been doing very well. A lot of power names have been very, very strong. Small case in point would be a stock like GMR Power, which has been locked in 20% upper circuit. They've announced some order wins, but just the ferocity of the buying that we're seeing around a stock like this kind of explains what's going on. That's on the mid-cap side. Of course, there's been NTPC on the large-cap space. So power continues to be a big, solid theme along with commodities. Nigel, what do you make of the market's moves today?
Surbhi, sometimes the party is good, right? But the after party is even more important. I think that's what's happened today, right? You had a good session on Friday, and the bulls would have liked a good session today. Today, we almost went into the red as well. The Nifty Bank as well was struggling. But I think with 60 minutes to go, the bulls will look at the screen and they'll be saying, this is what we want. We want the markets to move a little bit higher. May not be a blowout rally, but gradually trend higher, conquer those crucial resistance zones, and then we'll be making another charge for around the 20,000 odd mark. So it's a good looking screen, a short point to make. Well, Mitesh Thakkar is back with us. Mitesh, what do you make of today's trading session? The Nifty, the intraday dips, if you bought it, you'll be making some money. But your view in terms of levels as well as individual stocks?
Yeah, good afternoon. So, I've maintained a positive bias, suggesting dips to be bought into, and now looking at a test of 19,550, and we are not very far away from that. And then possibly 19,680, 700 zones. So I think we'll maintain a long bias. It's clearly the Nifty IT stock, IT pack, which is doing very well. So I have some buy calls from there. HCL Tech is something, which is broken into a fresh swing high. And therefore, I think could see more continuation on the upside. So that's a buy with a stop at 12.10 for targets of 12.65. And the other one which I like is Syngene. That's reversing after some correction. So buy here with a stop at 7.82 for targets of 8.20.
Thank you very much for those trades. We'll connect with you in just some time now. IDFC First Bank is surging in trade on the back of a large trade. Nimesh is here with the details and also a valuation check on the stock. Nimesh.
Hi, Rima. So, as you rightly pointed out, there was a large block on Friday in IDFC First Bank where 4% equity had changed hands. And I had indicated that there was a large buyer into that. Now there was a confirmation that GQG bought nearly almost 4% of the company's equity, which is IDFC First Bank, via block deal on Friday. The seller was Warburg, who sold nearly 4% stake. They were owning 7%, so they're still left with 3% stake in IDFC First Bank. Now the next thing is whether there will be a clean out trade in IDFC First Bank from Warburg Pincus. There is a bit of an indication that this clean out trade or the block can come very soon in IDFC First Bank. So that's something to track going forward. The other thing is the valuation. If you look at the valuations of IDFC First Bank within the peers, it's not very cheap now. I was just looking at the data which Abhishek had shared with me. It's trading at a price to book of close to 2.27 now, versus the peers like Federal Bank trading at 1.26, Yes Bank is trading at 1.24, and Bandhan Bank is trading at 1.66 on the FY24 basis. But in terms of growth, IDFC First Bank has shown a very strong loan growth in Q1 as well. So within the same set of peers, in terms of loan growth, IDFC First Bank reported a loan growth of 26% versus Federal Bank reporting 20%, Yes Bank reporting just 7%, and Bandhan Bank reporting just 6% loan growth on a YoY basis. So loan growth has been strong. The numbers have been strong for IDFC First Bank. But in terms of valuation, now it's trading at close to 2.27 times on FY24. Two things, as I said. One, GQG was a big buyer, and there could be a potential clean-out trade for the remaining 3% from Wabuk Pinkers in IDFC First Bank very soon.
Okay, thank you very much for that. Deepak Shenoy, founder, Capital Mine, is with us on the show. Deepak, IDFC First, valuations are expensive, but growth is strong. How would you view it?
It's a very interesting bank. I'm a customer, not a shareholder. Probably own one share or something. But overall, the bank has shown growth in the last year. It continues to have. I think what will happen, at least for the mid cap and perhaps even the small cap banks, is they're going to see the repricing of some of their liabilities now because a lot of interest rate hikes have translated into some increase in their deposit costs and general liabilities. But for IDFC First, I think a lot of that has been repriced on the loan side, the asset side of the book, but not so much on the liability side yet. So they're going to see a little bit of a crimping down of margins this year. But still, the valuations were not so bad that and there was an overhang of this IDFC merger and a bunch of things that were in place earlier that was kind of driving down the price of the stock and perhaps creating uncertainties. But now, since most of that is behind us, I think now the focus is on growth. So it's an interesting bank, a mid-cap bank to own. We own the larger cap banks at this time, but I don't see any red flags or serious red flags in something like an IDFC First Bank, other than if something in their loan book turns sour. There's been some issues with Vodafone. I think that has also kind of gotten resolved for the most part, at least. Some visibility is there. So a lot of those things have come out. While I'm not an owner of the stock, I think it's an interesting time to kind of analyze the stock a little more, perhaps wait for the September quarter results before we take a decision.
Okay. Wait maybe a little bit more. You are owner, right? You said one share. You are. Well, Deepak, hi, afternoon. So let's just talk about power, right? I mean, more and more one is hearing of not new renewable power or anything, but old, dirty, coal-based thermal power, and how that is making a bit of a comeback because, I mean, it is needed, right? Base load can't be met with renewable, at least not right now, unless you have storage, etc. in place. And power demand has been hitting new highs. But that's not a story just for, it's happening now, but it happens every year. Demand goes up. And since no new capacity has come up, every year one ponders. But there is action this time. NTPC announced that big order. It went to BHEL. When is the last time you heard a 11,000 crore order for BHEL to make boilers, right, on the power side? Would you look at, stocks have gone up, but the point is if this is the start of an ordering cycle, then not very much has happened. What's your sense?
Yeah, I think from power perspective in general, we're going to need a lot of expansion on every front, whether it is nuclear or hydro or hydroelectric or any other form, including thermal. Thermals continue, at least for the next decade and a half, we're going to see a lot of thermal, and it'll be a significant percentage of our total revenue generation, incremental revenue generation as well, because it's relatively easy to set up. It's just that coal supplies have always been complicated in India, and we've had import from Indonesia, from a bunch of other countries in certain cases. And given that all of this ecosystem will need, NTPC is probably one of the few players who don't seem to have that problem in terms of supply. So I would say thermal power will continue to be important. I just don't think we should give a lot of PE ratios to these companies. A lot of times the growth potential is not reflected, although they may have big orders. It'll take years to execute, and there are lots of environmental and other challenges as well to execute a plant like this. So I don't expect that growth to come anytime soon. It will be of the order of 8 to 10% a year, nothing great from that perspective. But one thing has happened. The electricity situation in India, where there were a lot of discoms involved, there were a lot of cash flow issues, there were a lot of distribution issues, and complications with private parties in the distribution business. All of that has more or less been sorted in the last maybe 5 to 7 years, where we've seen tripartite agreements and a lot of regulatory force, CERC, coming in that has eased out the cash flow situation, both for the lenders to these entities and for the producers as well. So I think cash flow wise, this should be a better business. So it does call for a little bit of a re-rating. We probably own, a few of the fringe players. I mean, players who are not only power, so they're probably a bunch of other things as well. But I think over here, we will see some kind of a re-rating in the next few years. It's probably already happened in the prices. We have to see how the earnings cope up in the next 6 to 12 months before we can take a call of whether this trend is sustainable or not. I do expect a margin bump up for NTPC at least.
Okay, all right, got that, Deepak. Deepak, let's discuss some cement stocks. And cement stocks clearly have done well. Maybe it's the pre-election spend and volume update as well. Maybe that's what's exciting the trade. But Jefferies has come out with a note, and they have interacted with dealers. Let's run you through the key takeaways. They're saying in terms of prices, in the month of August, prices were down by 1 to around 2%. However, in the month of September, price increases have been pushed through, whether it's 10 to around 35 rupees. Particularly in East India, it's more towards 35 rupees, and they're not ruling out another price increase in the coming weeks. In Central India as well, there's been a price increase of around 10 rupees. And West India as well, price increase of around 15 rupees. So there are price increases across the board. Demand as well remains impressive. We're talking about the monsoon not being good. That could be one of the factors that is pushing up demand. And offtake has been very, very good in the month of August. A couple of factors could be pointed out here. One is because of the weak monsoons. The second factor is anticipating prices are going to go up in September. Well, they have gone ahead and they have bought the cement that they require. So offtake is very, very good. Now, the prices have been increased, but we need to see how much of this price increase of 10 to 35 rupees is actually absorbed, because many times we have seen pushback from the buyers. Jefferies, they say that they expect a double-digit demand growth in the coming fiscal. And also they go on to state that quarter 2 could have a pleasant surprise, because you'll have operating leverage playing out with offtake being rather good. Energy cost as well has been will be dipping. And in addition to that, prices on a quarter-to-quarter basis will be more or less flattish. Nomura, well, they have gone ahead and they're more bullish on Shree Cement. They've upgraded the stock to buy from reduce, and target price moves up to more than 28,000 rupees. They're saying that the cost optimization, strong capacity growth, as well as change in management, all those two factors bode well for them. Deepak, cement stocks doing well, pre-election year. You normally see a bit of a move and, demand getting a push. How would you approach this space? Small cap, medium cap, large cap?
Yeah, if I had to do cement for a larger term trend, I think you'd do the large caps. In general, if they will benefit, there's cartelization in prices. There is, there is a lot of demand. I mean, there seems to be a lot of demand, at least from the real estate sector, in terms of projects coming up and so on. I think usually September is lousy for them, because the quarter September lousy for them because of the monsoons. This time it seems like, people have been able to get some work done because of lack of rains, at least in the south, south and perhaps part of the east as well. I think at this point, it's a little premature, right? We have another month to go. We can hear about what players are saying. But what usually happens is the lack of demand in the September quarter spills over into higher demand in the October to December quarter. So if you're playing on this quarterly, and you must, because cement is just a cyclical play. If you play on it on a quarterly basis, then you should assume that the demand that's been taken up in September will in the December quarter will see a relatively lower demand at that point. So I would say in general that I don't expect that cement stocks will outperform dramatically. They've actually come down in terms of their P ratios, in terms of even their enterprise value multiples. That way they're an okay buy, but honestly I see more growth in a lot of the other sectors, whether it's defense, railways, manufacturing, and import substitution compared to cement. So while they may be a good proposition, I think there are bigger and better stories out there.
Okay, all right. That is the word on some of these cement stocks. By the way, look at what's happened to some of these railway stocks. I just want to pull up a couple of names. Even today, I mean, the rally is absolutely relentless. An IRFC or an IRCON for that matter. Big volumes and price action on this. IRFC, by the way, today is up 19%, beg your pardon. Volumes are pretty smart. And for this year, the stock has rallied about 100%. That's today's move. And that's IRCON. Let's pull up IRFC as well. IRFC is up for 18 to 19%. There's obviously RVNL, which has been rallying relentlessly. Long list of winners on the railway side. Deepak, what's your sense? I mean, I was just thinking IRFC, Railway Finance Corporation. I mean, it's not the hottest or the snazziest of stocks, right? But all of these names that I'm taking, they're up anywhere between 90%, 100 and 120% just this year, this calendar year itself. What do you think is really going on? I mean, is there a bit of an extra euphoria here? Would you advise caution? Or are you convinced about the story?
So honestly, Surabhi, I think there's a lot of froth also here. Like you said, there's probably, IRFC is actually very interesting because it has, I think, no NPAs in that context. So it does lend to the financial sector, to the railway sector as a financial entity. But a lot of the other players are backing on the fact that the government's improved rail infrastructure quite dramatically in the last few years. And now with a few things coming into play, whether it's a dedicated freight corridor, which will increase passenger trains because you'll move freight trains to the freight corridor as it gets ready. So you'll have the number of passenger trains going up. You have whether it is an IRCTC or whether it is an RVNL and we own some of these players. So it's not to say that we're not biased, but I think over here, the story is more longer term. You're still looking at companies which are valued at 20 to 25 times earnings. So it's not ridiculously high priced. But we have to assume that some of these, the nature of the business is that whenever there's capex, and there's going to be capex for this and for probably the next 2 years, that these companies will continue to do well. It is when the capex slows down, it goes on to maintenance, is when they will not be able to sustain these earnings going forward, perhaps. But I still think there's a lot more to come in terms of the story, in terms of railways itself. I believe you should always tread with caution, regardless of what price the market is. So you're paying, but you shouldn't anchor yourself to the past prices, because there has been some kind of an inflection point here in terms of you look at the number of contracts they're getting, and India has moved from giving contracts to companies abroad to moving to these contracts, giving these contracts to the local Indian companies, whether they are PSUs or not. So in that context, their order flow has gone up 3x to 4x. So it's actually the business that's improved, not just the stock price. So I think stock prices have gone up, always calls for caution, but I think the business is also there. And I believe at least for the next 2 years, you're going to see a tremendous amount of growth.
So which ones, Deepak? That's the hard question, right? There are a bunch of them, and all of them are PSUs. Which ones are you still convinced of, despite this run-up, where you think that the fundamentals are very sound, and then therefore we need to get used to looking at a very different price orbit and different valuations? Is it RVNL, IRFC, which one?
So we've owned RVNL for a while. I think that's for multiple reasons, because of the style. We've owned IRCTC as well, but the valuations there were a little high in our opinion. But of course, they've gotten even higher at some level. But I think the idea of IRCTC will be, it's more downstream, because once these trains start coming in, and there are more and more of these trains, you're going to see a lot more enthusiasm for a booking platform like IRCTC and platform upgradations will happen, and IRCTC will participate in that as well. So I think that is more down the line. So you want to wait for the capex plays to start. I'm not so sure about IRFC, although it's doing really well. It's great for a technical portfolio like a momentum or an alpha kind of a portfolio. But fundamentally, I think I'd rather play the guys who are actually doing the contracts than the guys who are financing the contracts at this point. It just feels that they'll make better out of it, because while they make 8 or 9% margins only, sometimes 4 to 5% also, but the business is steady and their cash flow is kind of assured. Because their PSUs participating in government-led contracts. So I'm more interested in that right now. I think IRCTC will increase positions only later.
That's an interesting one. We'll watch out for it, because that's the one that hasn't rallied absolutely into this crazy stratosphere like the rest of the railway stocks. So let's see if it plays catch up. Great chatting with you, Deepak. Thank you very much for joining in. As always, a pleasure having you on the show. Time for a quick break now. We'll come back on the other side, and Abhiram Elswarupu of BNP Paribas will be joining in.
Welcome back. The Nifty's firm above 19,500. The PSU Banking Index continues to move higher. The Nifty PSU Banking Index is a gain of more than 2%. In individual names like South Indian Bank, pull up a South Indian Bank. You've got strength in Bank of Baroda. That's up close to about 2.5%. PNB, UCO Bank, all these stocks have started seeing some traction now. And IT is another pocket of strength where HCL Tech, Wipro continue to get bid up. So watch out for PSU banks and the strength in IT. But here is a CNBC-TV18 news break confirmed. Now, Nazara Tech will be issuing 14 lakh equity shares at a price of 714 rupees per share to Nikhil Kamath's firm. Now, overall, this entails an infusion of close to about 100 crore rupees. Now, earlier today, we had a chat with Nikhil Kamath, and he said the broad bet is on gaming. He sees the entire gaming ecosystem develop over the next 10 years. He likes, Nazara technology, and he would like to be a long-term partner in Nazara Tech and perhaps even look to further increase his stake in the company. Listen in.
Very likely, I'm looking at this as a really long-term play and would love to engage with them more in the future, maybe increase and play the esport gaming thing through them. And the stake was about 1%. I think now it should be up to about 3.5%.
Right, that was Nikhil Kamath talking about the stake that he's bought in Nazara and the reasons behind that. We also caught up with Nitish Mittersain, Joint Managing Director and CEO of Nazara Technologies, to talk about Nikhil's investment in the company and, of course, further fundraising plans and the direction in the immediate future. Take a look.
I think, from an India tech entrepreneurial perspective, Nikhil Kamath embodies, success and running a very profitable business, pioneering in his space. And from that perspective, I think bringing him on board was something we were very excited about. This was a specific proposal that we recommend.
Well, with an interesting list of companies in the listed space, we did see that Mr. Nikhil Kamath going ahead and, in fact, buying that stake. That was earlier today. But I think Hormuz is standing by. He's joining in to tell us about some interesting data that he's picked up. Hormuz?
Well, in the same interaction that CNBC-TV18 had with Nikhil Kamath earlier this morning, he mentioned that he has, besides Nazara, he has a stake in other listed entities as well. So we tried to dig up some data, but before we get to those 4 names that we have come up with, here are some criteria that we have put in place. One is that all of this data that we are highlighting is available on the exchanges. 2, the data available on the exchanges is only for those stakes that are in excess of 1% or more. And 3 is that all of these stakes are in the name of Zerodha Broking and not Nikhil Kamath in particular. And lastly, a disclaimer is that there is a possibility that Nikhil Kamath may have a stake in other listed entities as well. Now let's get to those 4 names. And the first one is Federal Bank. And Zerodha Broking's name as a shareholder first showed up in Federal Bank in September of last year. Now that 1% stake that Zerodha owns is currently valued at around 350 crore rupees. Now since September of last year, shares of Federal Bank have risen close to 16%. Now the next one is RBL Bank, and it continues to remain in the news ever since Mahindra & Mahindra acquired a stake in the lender. And Zerodha also has a stake in the bank since December of last year. At least that is when the name showed up in the shareholding pattern. And that stake is valued at close to 180 crore rupees. And since December of last year, shares of RBL Bank are up close to 30%. Now, next up is BSE, where Zerodha Broking also has a stake. Now, their name showed up in the shareholding pattern for the first time in September of 2020. Now, that time they had a 1.6% stake, which they gradually increased to 3.5% as of June of 2021. Now, it remains at that level till date, and that stake is currently valued at close to 200 crore rupees. But the interesting bit is that since September of 2020, shares of BSE are up nearly 500%. And lastly is an interesting name on this list, and that is Car Trade Technologies, where Zerodha has a stake. Now, their name showed up in the shareholding pattern in March of this year. And interesting is also because that 1.2% stake is currently valued at 30 crore rupees, but Car Trade Tech shares are down nearly 70% from their IPO price. But since March of this year, the stock is up nearly 15 to 20%. Back to you.
Okay, Hormuz, thanks very much for that. It's a problem of plenty, guys, right? Zerodha, I was just looking FY22. Profits were 2,200 crores, net profit.
2,200 crores.
2,200 crores in profits, net profit. 2 partners and the 2 brothers. 0 debt. Yeah. I think under 100 employees.
No wonder he couldn't exactly remember whether it was 100 crores or 150 crores.
Yeah, we were just discussing
this is FY22. FY23, I mean, assume a 20% growth, it would be in excess of, 2,500, 2,600 crores. So
phenomenal business throwing up so much cash.
So we were just discussing, right, that he said that he's put in 150 crore, right, in Nazara. We were like, but this investment is only valued at 100 crore. Maybe the 0.6% that he earlier held, could be valued at 50 crore, but it didn't quite add up. And then we were just speculating, perhaps it's just that, when you have so much, you don't really try and count the last, pennies in
and by the way, I forgot one thing, no investors.
No investors. So it's
Two
all
partners,
theirs.
no investors, no debt. I mean, it's like, there are very, very few companies like Zerodha out there. And, I know for a fact that so many investors have been trying to get a slice of it, right? I mean, trying to go to them, pitch, well, why don't you take us in as investors? But they don't need investors. And they're highly profitable and it's a fantastic business what they've created. Well, Abhiram LS Swarupu is head of India equity at BNP Paribas. He's joining us now. Abhiram, good to have you with us here. Thank you very much for your time. Let's just I'm going to start by asking Abhiram, have you increased focus on mid caps and small caps, just institutional coverage? Do you have a fair bit of requests there, because that's the part of the market which is doing so well, right? And it's not for nothing. Results are coming, companies are doing well. And the thing is, a lot of themes, you can only take exposure through these smaller companies. They're not there in the large cap space. So that's the other thing. So just wanted your thoughts there, Abhiram.
Yes, indeed. Actually, we have got a lot of inquiries on mid and small caps. To be fair, since around February, March or so, I'd say that investors have put in disproportionate interest or attention towards these mid and small cap companies. And to be fair, they're up, 25-30%. And I was looking at the Nifty itself was probably up in single digits year to date. So there's also been significant outperformance. Actually, there's, in my view, at least a couple of reasons why that may have happened. First is that India is obviously being seen as a structural story. I mean, those credentials have become much stronger year to date. And investors are looking at multi-year stories, which they can, make multiple returns on as multi-bagger ideas over the long term. And as a result, they're starting to look much more at the periphery in India, whereas the larger cap names, obviously, the stories are very well known. And the second bit is there's been a lot of domestic money that's come into the market, and that tends to obviously flow into to smaller names where the understanding there is probably quite good. As a result, for us also, we've started looking a lot more at these names. But that said, I also sound a word of caution going into the second half of the year. Just given the significant outperformance that we've had so far, I would assume that between now and the end of the year, investors are probably much better off increasing weights in the larger names.
In the larger names, would power feature as an interesting theme for you to bet money?
At a broad level, we're looking at four major themes. The first is affluent India, and that will include, higher end consumer, pharma, healthcare, etc. Second is financials, which have obviously not performed as well as we thought, at least the banks. The third bit is IT, which started to improve since the last time we met. So that's three of them there. And the fourth is CapEx, especially government, defense, railways, that kind of thing. So CapEx is the fourth theme.
Very interesting. So Abhiram, hi, good afternoon. Let me start off with the first one, affluent India, because we're seeing, at least, those of us who are here in Mumbai or in Delhi, they're really seeing the rise of this affluent Indian, consuming class. So, I know you won't talk stocks, but then how exactly are you looking to play it? And within this theme, are you looking more at large cap names, or are you willing to go to, level 2, level 3 and actually look at mid cap themes here?
Oh, we will look, we would like to go a little deeper and look at smaller and mid-cap names as well. But at the moment, our focus is on larger names because, in fact, to be fair, this was a report that just came out today where we looked at this. There are a couple of elements why affluent India. If you see, the formal economy is actually doing very well. You see GST collections, for example, were pretty good. And if you see the latest tax data, the kind of population that's moved to higher tax brackets has been extremely strong. And that tells you that the formal economy is in pretty good shape. I'm not sure I can say that about the informal or rural economy, but I do see there are some headwinds. So how do you play this? You look at companies that sell premium items. So it could even be consumer staples. But if that is the case, then you're looking at those that sell higher end products, so to speak. The second bit is you look at healthcare, where today the population is more than happy to spend on preventive care, on higher end surgeries, etc. So hospitals is a theme, diagnosis is a theme there. Or else you just go out and look at financial instruments, because the richer you get, obviously you want to place those with banks or invest in the market, etc., etc. So and banks are a beneficiary of that theme. So that's the way we're looking at it.
Hi, Biram. Good afternoon. I recall we had this issue with EPAM. EPAM, they had come out with a guidance, and the street was a little bit disappointed. And you said you look at the IT companies positive with a longer time frame, I think. So you said maybe some part of the bad news is already in the price. What's your view on tech from here on? Because that index clearly has been very, very strong. Do you think there's more to go from here, or would you buy it just for the longer term?
I think there is more to go, and there are a couple of reasons why. If you take the last quarter results, admittedly revenue growth wasn't great, but deal win momentum was quite strong. So at least from what we counted, deal flow was up something like 13% year over year, even as revenue growth was probably in low single digits on a year over year basis. So clearly something was brewing there. Companies were winning deals. And so also happens that Indian IT companies may have benefited where companies based elsewhere, for example in Europe, may have struggled because of the political situation there. In addition, I think investors are paying undue attention to, let's say, US macro data. For example, if you look at US manufacturing, it's still in contractionary territory if you go by ISM. But deal wins and that data actually decoupled somewhere early this year. US services ISM, for example, is still very strong. So I think investors are focusing on a broader set of data rather than looking at the ones that may have been more relevant for the sector. And if you look at that and spend more time on that, it does appear that, to be fair, in the second half, you could actually see a pretty good recovery in terms of revenue growth as well.
You spoke about railways as one of the themes when it comes coming under the broad brush of capex, right? Defense and railways. Railway stocks have gotten re-rated. Will you look to book profits? Are you getting a bit cautious here? Any signs of overheating according to you?
Well, actually, I'd say this for the entire mid and small cap space going into the second half of the year. I would be a little more careful, because the mid and small cap indices are actually more expensive than the large cap index. If you take a look at the Nifty today at 18 times, it is not exorbitantly expensive. It's probably only about 3 to 5% higher valuation than what it has been in the past 5 years or so. So I think large caps is probably where you'd want to weight your portfolio a little bit more. And also bear in mind that as you go into the second half, especially when you're talking about capex names and government capex, and obviously there's long-term story there, but it also may be the case that some of the capex may have been front-loaded, considering that we are heading into election year next year, and things automatically start to slow down towards the second half of the year. So I think now is a good time to kind of rebalance the portfolio, start to think a little more safety, and expect returns to be a little more moderate.
Okay, all right, Abhiram, good chatting with you today. Thank you very much for joining in with all those ideas in that context. That's a word from BNP Paribas. We do have to take a quick break with the news. The market's actually moving along quite nicely, and should watch out for tech stocks. There's a lot of buying that's picked up in the frontline tech names. Look at Wipro. It's up 4%. Now, that's a move you can't ignore, 4.25% actually. HCL Tech, TCS, Infosys, all the large cap IT boys, they're seeing lots of buying today. So very interesting trends. In any case, a lot of these stocks have completely sort of washed out or wiped out whatever losses we saw immediately after the first quarter. For instance, if you pull up Infosys 3-month or a 6-month or a 1-year chart, then the decline that we had at the end of Q1 and the disappointment that showed up in stock prices completely evened out in the subsequent 2.5-3 months. Interesting, as the next trigger for the market obviously is going to be the next earnings season. And now we will, that's what I'm talking about. You see that decline on Infosys. Now with the stocks rally in the last 2 months, it's practically getting back to those levels. Interesting moves and recovery in IT. Quick break on that note. We'll come back on the other side and tell you what dealing rooms have been buzzing about today. Nimesh will join in with the D Street chatter. And of course, then some trading ideas coming up with Nitesh as well.
Welcome back. A very good trading session is what we're seeing. 19,530 odd. And if you can, move up a little bit here, maybe that 20,000 could be again in the reckoning. We'll have to see how that goes. But Nimish was with us for our special segment, D-Street Chatter. Nimish, what are you picking up out of nowhere? The bulls have made a comeback and things are looking up.
Well, it was not unexpected. Frankly, the way we saw the momentum on last Friday as well, the week on week ended on a positive note, which was a good technical reason for the bulls to carry on. And that's exactly what I said as well, right? The momentum is with the bulls. So it's clearly playing out market at almost a day's high. And the good part is it's backed by a lot of sectors today. So the IT is doing good, metal names are doing good, cement stocks have bounced back very sharply. It's an all-round show, so to speak, as far as the Nifty is concerned. In terms of flows, again, it's a mixed day of trade, very selective in terms of large buying into the selective names, but broadly the broader markets is where the big action seems to be. It's largely outperforming. And on Friday, I put out a piece that the BSE Small Cap Index had hit a whole new all-time high last week. And since then, analysts are expecting another 10 to 15 upside on the index. Today is the first day. The BSE Small Cap is up 1%, Mid Cap is up another 1%. So big momentum in the broader markets. And also the fact that the PSU index is just on fire, right? Today all the real PSU stocks are buzzing on huge volumes as well. So the PSU party continues, the broader market party continues, and there is very selective buying in the large cap names. But the good part is for the Nifty today, IT, pharma, cement, all are buzzing and supporting the Nifty.
Indeed, Nimish, screen is looking very, very good. And what comes to mind is what our Prime Minister Narendra Modi said, right, in Parliament House. Watch those PSU stocks. They have just taken off. But individual stocks, what do you pick it up?
So in terms of individual names, the first stock on my list today is Cholamandalam Investment. That stock is marginally under pressure today, 2% down. And I believe, the street is expecting equity fundraising very soon in Chola Investment Finance. So that's something to track in that particular stock. The second stock is LIC Housing Finance. Within the NBFC, this is in a big move in today's trade, largely on back of strong FI buying. So the delivery volumes are going to be quite high in LIC Housing Finance in today's trade. The third stock is Z Entertainment. After a long time, some bit of institutional interest seems to be back in that particular stock. The volumes today are on a higher side, and I believe some larger FI seems to be interested in buying that stock. So it's not reflective in the stock price today, but the volumes are going to be quite high in Z Entertainment as well. And the last stock is Tourism Finance. Has been buzzing in the last few days. Again, the indication is there's going to be a large block in Tourism Finance very soon. So that is something to track as far as Tourism Finance is concerned.
All right, interesting list as always. And newer companies make that list now, right, Nimish? With so much interest and widening of tourism finance. I think the first time it's coming up on D-Street Chatter. Anyways, thanks very much for that. So we'll track all of that. 19,530 is where we are at on the Nifty, 95 points higher, and it's looking very good across the board. 1,500 stocks are higher, and about 850, 860 stocks are down. That's advanced decline for you. Mitesh is with us to tell us now what to do in terms of if there's something to be done on the index and specific trades. Mitesh, go on.
And I'll go with a couple of long calls on the BTSD segment. ACC, I think, is closing near the day's high. That's BTSD with a stop at 2045 for targets of 2085. And we had earlier HCL Tech as the recommendation. Now I'm recommending TCS. Disclaimer, I have some futures position here, so vested interest is there. But TCS, I think, is also a BTSD with the stop at 3400 for targets of 3440.
Mitesh, thank you very much for that. The sector of the day are the railway-related stocks. Vivek is here with a compilation of the stock moves, the valuations and the triggers. Vivek.
Well, absolutely. So what we've done is we've actually seen, number one, all of the railway stocks, how they performed in the last 1 year. You'll be surprised at, some of the sharp moves that these names have seen, how they've done, especially in the last 1 month. The movement has been exaggerated. We've also seen, the valuations at which these companies are currently trading at. And very importantly, what is the promoter holding? In these cases, it's actually the government holding. So there is always a worry of an OFS. So which are the stocks, where there is a possibility that there could be an OFS kicking in order to adhere to SEBI's minimum public shareholding norms. So the first stock on our radar is RVNL. This particular stock is up almost 5x in the year gone by, 387%. That is up 4.8 times. In the last month, it's up 28%. And valuation at this point of time is 20 times 1 year forward. That is FY25, 1 year forward price to earnings. Government holding is below the SEBI required norms of 75% at 72.5%. The next stock on our radar is RITES. Last 1 year, the stock was up 72%. 1 month up 13%. government holding at close to 72.2%, and valuations is 19 times 1 year forward FY25 price to earnings. The next stock is IRCTC. This particular stock has been a laggard. It's moved earlier, but this particular year the stock is actually down or flat on a year-on-year basis. 1 month the stock is up 7.5%. Government holding at just around 62.5%, and valuations at 23 times 1 year forward price to earnings. The next stock is Ircon. This particular stock has tripled in the last year. 1 month, the stock is up 46%. Government holding stands at 86.36. So over here, at some point of time, there will be an OFS, or there has to be a certain amount of dilution in order to meet the MPS norms. Valuation, if you're looking at it, is 15 times 1 year forward. IRFC, the stock is tripled, 202% in the year gone by. 1 month up 46%. Government holding over here to 86%, and valuation at 1.4 times price to book. And Railtel, this particular stock is up 134%. In the last 1 year, 1 month up 40%, and valuation is 30 times 1 year forward price to earnings.
Got that. It's quite... when you say it, we need to remind ourselves and believe it, Vivek. But otherwise, these railway stocks have been a phenomenal journey, haven't they, Prashant?
But, he was talking about valuations, right? 20 times, even after the rally, right? That's the whole point. 1 year forward, 20. You don't find 20 times anything in
Considering
this market,
that a lot of mid-caps are trading at 60, 70 times. I mean, the EMS
companies, right? The Sirmas, etc., at 60, 70 times forward.
Now, we don't know whether all of them will make a lot of money, but at least the tailwind is there, that the government is spending a lot on railways. Right? Defense and railways, the two areas where...
I think the only risk is, as one of the experts pointed out, is there a bit of front loading of the capex? Like, can this quantum of orders sustain going into the next couple of years? I think that's going to be a bit of a risk.
And also, as even Deepak was pointing out, that when you get, let's say, an order for an improvement of additional track laying or signaling equipment, not every single company benefits equally, and then depending on how that revenue gets divided. So those are the things to look at, but it seems to be a matter of buy now, think later when it comes to
one stock I'd like to point out before you go to Anand. Look at Jayaprakash. JP Associates is limit up now, 20%. So 13.5 rupees on Jayaprakash Associates. And volumes yesterday were high. Today, actually for the last 3-4 days on a trot, volumes have been very, very strong. There you go. That's I don't remember the last time it was up full 20% daily limit. So, but it is right now. So,
I don't remember the last time we pulled up the stock on our screens, Prashant. It's that kind of a market. So, therefore, just think a bit about what you buy. That seems to be the general advice that a lot of experts will give out. Well, let's speak to our next expert on the show. Anand Tandon is with us. Anand, good afternoon. I guess you might have been, hearing us chat now, and that's the kind of market we're in. Let's start first with your take on these railway stocks, which have zoomed up 100%, 150%, 200%. Now, how do you approach it? I guess as an investor, you don't want to miss the opportunity if this is a big long-term change that's underway. But at the same time, you get a little worried looking at this level of momentum. So what would you advise?
So, obviously the central government has been pumping in money in railways. If you look at the budget, you're talking about capex, which is running into... When we had a separate budget, it used to be 1 lakh would be the total budget. Now we're talking about 2.5 lakhs as the capex alone. That will have to translate somewhere, and companies like RVNL are obvious beneficiaries because they execute projects, not just consult on them. And if you compare them to the rest of the market, they are more or less in line with where the market is in terms of the index, whereas the outlook for growth is far better than many of the others. But you also have to keep in mind, as you said, margins for these companies are rather thin. RVNL doesn't make an operating margin which goes even into double digits or even close. And therefore, you are looking at a situation where it's more or less completely driven by one buyer, which is the central government, and therefore you are really trying to predict where that budget flow will be. That's always a difficult call to make. It's not likely that you will continuously have the kind of growth that the current government is pushing. There will be, very soon probably you'll be hitting a wall there, and therefore you have to be careful about the multiples. At this stage, I would not be very comfortable rushing in to buy these companies, but then that is pretty much true for more or less the entire market, because the market itself is trading at a valuation. I find it difficult to find stocks in the large cap which can justify significantly higher prices from where we are.
Anand, afternoon. Any thoughts on Kotak Mahindra Bank, the sudden resignation of Uday Kotak? How do you expect the stock to be for the next 3 months till clarity emerges?
Well, it's not been a great performer, largely because of the fact that there was an overhang in the terms of management change, and that has now been brought to focus because of Mr. Kotak's resignation. How that will change, we have to wait to see what RBI does. There has to be a change and we have to see who's the new management in. The key challenge is that Mr. Kotak was more than just a shareholder. He was also he is one of those people who has probably the best whiff of what's going on in the industry in terms of when you should be pressing on the accelerator and when you should be taking your foot off it in terms of growth. And you can see that in the kind of book that Kotak has built over time and the kind of almost counter-cyclical behavior they have in terms of asset growth. And if you see any other analysts when they criticize the lack of growth in certain periods of Kotak, it's largely because they fail to anticipate that you're heading into a slightly tighter economic situation. So he has done a lot of risk management while he was there, which is not particularly appreciated well enough, in my view, in the market. And we have to see whether the new leadership is able to kind of replicate or improve on that. I think improve would be a very tall order, but at least if they can replicate that, then I think the bank can do reasonably well. It's obviously one of the most capitalized banks, can grow much faster than if it wants to, and is probably the only serious kid in the block to kind of challenge the dominance of the top 2 or 3.
Okay, all right, Anand, stay on. We'll take a very, very quick break. We will come back with some more questions and then we will come down to the market close as well.
Okay, just counting down to market close. We'll thank Anand for his time and valuable insights in the show. It's a 100-point gain on the Nifty. It's picked up a bit, 19,535, a 0.5% rally. So it's pretty good, right? After Friday's big move, there has been follow-on buying. The dip in the Nifty was close to 10 AM when the gains completely flattened out. But since then, markets have been climbing higher and higher. The big two sectoral gainers include IT. IT is up 2.1%, and the other one is metals. The metal index is up 2.2%, with individual names like HCL Tech, Wipro in the IT pack, TCS, Infosys, and commodity-related names like Tata Steel, Hindalco. Power has had a very good session. NTPC scaled up 2.5%. Coal India, Ultratech Cement also seeing a lot of buying. On the losing side, ITC, Nestle, Asian Paints, a couple of these stocks where crude prices are an input have come under pressure. So that's Asian Paints. You also have softness in the FMCG names, ITC, Nestle. M&M, Axis Bank go home as the top losers, and Kotak Mahindra Bank, after the surprise resignation over the weekend, that slips close to about 0.5%.
And if I start naming all the mid-caps that have rallied today, we need another 1 hour. But I'll try and restrict myself to a few names. Look at IDFC First after the block deal, 6% up on that stock. Actually, Tier 2 banks have had a great run today. IOB, 6%, Yes Bank, 7%, UCO Bank, Central Bank of India, Bank of Maharashtra. These are gainers between 5%, 6, 7, 8%. Superb day for some of these banking stocks, you'd have to say. Metals, of course, were a shining bright spot in the market. That extended to beyond the Nifty as well. An example would be something like a Nalco, which is up about 6%. Beyond these two themes, I mean, look at names like Brigade Enterprises, CESC, 4 to 5% up over there. Look at, of course, Shree Cements with talks of price hikes now that the monsoon has subsided to a large extent. 6% up on Shree Cement. And then, of course, the theme really had to be those railway stocks all over again. IRFC looking at a 20% circuit as we're closing down. RVNL 11%. And quite a few other names like Ircon and the like. So big day there. Sugar, by the way, has been a very sweet spot. Bajaj, Hindustan, Sri Lanka, a lot of these sugar names managing lots of green on the screen as well. So blowout day for mid-caps. And the Nifty finally managing to have a close above 19,500. That's been the shape of the market.
Well, the small cap index will end about 1.4% higher. I mean, actually, smaller the better, right? Mid-caps have done well, but nowhere near what the small cap index has done. Actually, 1%, so can't really for mid-caps as well. But small caps have done even better. So it's a fantastic flying start for that part of the market once again after last week's 4.5% gain that we actually saw. So, I mean, that's a wrap out of what we had in terms of trade. Is now, of course, over to the US markets. But surprisingly, last Friday, after a softish jobs data, did not do very much. So maybe will things pick up there as well? And keep an eye out on oil, right? Almost close to 90. I mean, we're kind of ignoring that for now, but hopefully that doesn't go much higher than where it is. Well, there's a wrap from all of us here on this edition of Closing Bell. Thanks very much for staying with us. But don't go anywhere. A very special conversation with the president of the International Olympic Committee comes up next. Stay tuned for that.